I want to share some thoughts on this company called UiPath. I've seen a lot of buzz about it on Twitter. Shout out to Jake. He's a major lemonade bull, but also been really shouting from the rooftops for Path to get people to look at it more. So I've been looking at this company. It's an interesting company, and I think it could be a very good investment. It definitely could be. So, this is sort of an initial look. Definitely, could get things wrong on this company. Do your own due diligence. Please chime in or correct me where I'm wrong in the comments. I appreciate that. But I'm going to give you my thoughts that I have on this company so far. And so first of all, UiPath. It's UiPath, agentic automation. What does this company even do? What do they even do? They and it's called Path stock, and they're trading about $14 a share. They have earnings coming up in a couple days. Market cap is about $7.5 billion. And what does this company do? I think Jake shared this in the Path community on X. A series of links said, hey, if you have 5 hours, watch these links. I've watched all of these links. And I think what I found to be the most interesting, at least for me, was this, and I'll link it down below in the description here, but this fireside chat where Daniel Dines or Dinez, I don't know if I'm saying his name right, but Daniel, their CEO, he gave a presentation, a little bit of an interview talk about where the company is going right now. And then this other guy, I'll find the spot where I was here again. He gave a presentation on what they call their Maestro product, so UiPath Maestro. So what does UiPath do? They did something called RPA, or robotic process automation. They still do that. In my understanding of robotic process, they've done this for years. It's software that you sell, or that a large organization would set up to automate certain tasks. And it would be done, either by recording those tasks in a simple way or creating code, writing code that do those tasks. And those might be really simple things like, like a certain form. Someone fills out a certain form, and there's certain information, or a new employee fills out a bunch of information, and then that information is taken from there and input into another database. Or there's something, entries and says really repetitive rules-based tasks are done. That's what's called this robotics process automation. That's what UiPath has been building there. Building their company on. They have $1.7 billion of ARR, annualized recurring revenue. And so, but what they're doing now is with LLMs, they've built this year released this product called UiPath Maestro, where it's not just doing the robotic process, those RPA processes, those really defined processes, but what this Maestro product is you can build this whole structure of logic that says, hey, say in this example that this guy gives in this presentation, says an insurance company wants to have claims. There's some process, and the process could be someone submits a claim for their insurance, and then how do you handle that claim, right? You can break down that whole process into the intake, processing, requesting more info if necessary, updating your system, then communicating. You can like engineer exactly all the steps to solve that process. And then inside of there, you can do, inside of this sort of, orchestration of all these different steps, you can have robotic process RPA systems. So you could have, and those could be, in my understanding, those could be UiPath's RPA, or it could be other competitors' RPAs that you could just run inside of there. You could say, hey, we're gonna run an RPA that moves this form information from here over to these other systems, or moves, it updates this data in this way, and we know that it's the same process every single time, so it can be done in an RPA way. But then there's other bits of the process where it might be like, hey, we're going to process the email, all their attachments. Maybe some of them are written by hand, some of them are long, huge documents, and that's not good for an RPA. An RPA can't handle those because it's too undefined, all the information that's coming at it, but it's really great for an LLM. So you could take a large language model and you could plug and play an agent or an LLM essentially inside of those steps, and that agent could be trained to maybe extract the relevant details, say, from that claim, and then identify the claimant, or maybe checking for fraud, and then agent does a bunch of checks through the whole system. So you can essentially, you're orchestrating, this Maestro product is orchestrating these two different things. One, hard-coded, sort of established steps of an RPA, along with where plugging and playing an LLM where an LLM would have its strengths. So each of them kind of has their strengths for each step. If it's something really concrete, the steps are A, B, C, then you're going to be using RPA. If it's something where you need to read hundreds of pages and extract relevant details from something, you're not sure how the information will be presented, well, then you want an LLM to do that. And then also inside of this, Maestro, as this guy demonstrates and shows in this presentation, you can evaluate the success of each step. So you can say, hey, well, this LLM kind of missed some details, and the humans are in the loop and see that they missed some issues here on extracting some of the relevant details, and so forth. So you can see sort of where things might be failing or not working as successfully, and then make the adjustments and say, okay, we actually have a better LLM we're going to plug in, or there's a new model out on the market, we're going to switch that and now test that and do some A/B testings within this whole system that says, hey, what a claim comes in and a claim is processed on the end. And you could break this down for any process in any kind of system. You could be literally anything. It could be from someone's emails a business and has questions and about products, and they're going back and forth. You could have different logics and steps, or you record and input information from that customer, et cetera, to automate that and do follow-ups, et cetera. So any sort of process could be broken down into these steps, and it's a combination of this. What's new for UiPath is that they had the RPA before, but now they've built this Maestro product that has, you can do the LLMs. You're using the AI in the form of LLMs, and then also the RPAs as well. So that's my understanding of really, and this Maestro is really what the thesis is built on right now. If the market's seeing UiPath as RPA only, and if they're saying, hey, RPA is kind of dead, LLMs are the future, AI is the future, RPA is just basic coding, simplistic, rules-based coding, and AI is the future, then that's kind of why the stock, if I just zip out of here for a second, we go back to the stock and look at since the stock IPO'd in 2021, it was at $80 a share at a high, and now we went way down, probably around the time when a lot of the bubble burst and a lot of sort of in the sort of COVID bubble hype, and a lot of the stocks had a major crash, including Path. But and then along with that, though, I think the market's still discounting them and saying, hey, they're this. That's the thesis, at least, that they're this RPA only sort of system, and RPA is going to die. But what Path is saying is, no, RPA is way better at doing certain things, and LLMs are way better at doing other certain things. And we're going to orchestrate this sort of Maestro. You can be the orchestrator of your process inside of your organization. And hey, maybe what would have taken one person hours and hours and hours, you could have a human in the loop that reviews the whole claim. And maybe instead of it taking them 4 hours to do a claim, it takes them 4 minutes, something like that. And you, instead of having a massive claims team, you could have a tiny claims team of the very best claim sort of reviewers, and they can review this information and then say, yeah, approve or, disapprove these or deny these claims. So that's essentially what UiPath is and what they're doing. I think, actually, I find it, there's a little side note, it's confusing when you first start reading about them because they say they're robotic process automation. And like my first thought when I was thinking RPA or robotic process, I thought they were like literally doing the programming on robots, that like moving robots, like maybe in a factory, that are, maybe they're programming robots to do, weld like cycles in a manufacturing plant or something. Like that's what I thought. And I'm like, oh no, they're doing automations inside of a computer system, and this computer system could be covered over a bunch of legacy systems that an organization might be running on, and numerous legacy systems that it's sort of connecting in and out of, and connecting these things together. So that's the RPA. And now, of course, they have the Maestro software, as we're talking about. So then another question too, like to think about this is, and I'm still learning the sort of competitive landscape in this industry. But a question is, what would, Path's moat be? What would their moat be, in a few years' time? And I think if this Maestro is, is kind of as good as they claim, and we'll look at some more data here right away, at least that they present. But if it's as good as they claim, and they can roll it out and it starts growing and customers really latching on and taking hold of it, then the moat will be simply, for one, when you get your foot in the door at a large organization that's spending, hundreds of thousands or even millions of dollars on a software piece like this, and it might be, saving them even hundreds of thousands or more, or millions of dollars more in salaries, because they're so much more efficient, because, somebody can do a insurance claim process in a fraction of the time. The moat would be, once you set up that kind of a system and your foot is in the door inside of a legacy, sort of complex legacy system, and you do get it set up and it is working correctly, it's going to be super, super sticky. Like, I guarantee that is going to be super sticky. Those companies are not going to want to change that. The same reason they don't want to change their like old legacy systems, because they're all built and they're because they do work. Maybe they're far from perfect, but they do work, and you don't want to change something and then break something. So I think large, companies it would be, if you get your foot in the door, if you can get it set up properly, working properly, I think that's going to be your main moat, is that they don't want to have to change it again. And if it is working, then, and it is saving, drastic amounts of, of salaries and people, they're not going to want to remove that or go backwards from that. And then the other moat side of it would be, if they grow fast enough, and they say, in this presentation, they mention like, there might be certain LLMs, they're agents that are just tailored with the perfect prompts to do in certain industries, maybe insurance or maybe in banking or whatever it is, that run that do exact steps of a claims process, for example. They could then, if they go to another customer, they could plug and play those same LLM agents that are set up the exact same way, and then say, hey, look, this system's already working well for these other people we know. They have this LLM who does, who processes all the emails and attachments, and they have 99% success and accuracy in that step based on this agent. So you would have a bit of a flywheel if you're growing, learning fast enough, that would accelerate your ability to prove yourself to, other customers you're selling to. Okay, now let's look at some of the numbers here just briefly. This is just from their last quarterly results. Their fiscal year is really confusing. It's two So this was second quarter, fiscal year 2026, and now we have third quarter coming up, this right away here this week. Fiscal year 2026, even though, so then next year will be fiscal year 2027, even though it's year 2026, whatever. They kind of give, there's some schematics here, but looking at some of the numbers, the revenue is $362 million, ARR $1.72 billion. Their revenue is growing 14% a year, ARR is growing 11% a year. They have a non-GAAP operating margin 17%. This was kind of interesting. So based on the Gartner Magic Quadrant for robotic process automation, it's saying completeness of vision and then ability to execute. They have a number of players here, and they say UiPath would be ranked the highest, saying, look, UiPath has this sort of biggest, most complete vision with this Maestro system and the best ability to execute. So according to this quadrant, I don't know if I always take these things, this is just one data point. You got to see other perspectives. I've seen, graphs like this for Tesla full self-driving for years that have said full self-driving is like Tesla's way down in the bottom, compared to all these other people. But it depends. It's only, a graph like this only as good as sort of how you're evaluating it. So it'd be interesting to maybe dig into this more and see more perspectives on sort of where the industry, where UiPath would be ranked in other people's minds. I'm going to skip some of this. Kind of shows more of how they're showing even you can do coded agents. So you could have LLMs, but you could also do more concretely coded agents they're doing those different steps as we mentioned, as we talked about. But I'm going to scroll down. This is an important metric too. It says 108% net retention rate. So this is your if you're for all Lemonade, I think this is essentially in Lemonade terms, you'd call this your, for all the people who watch my Lemonade videos, your annual dollar retention. So 108% means, even there's probably very little customer churn. Most customers who are having it are keeping it. And that goes back to, that moat I talked about. I think it'd be super sticky because once you do get something set up and you are using it, the kind of customers they're selling to are probably don't want to change things. Very resistant to want to change. So 108% just means they can be increasing their prices, selling them more, adding more users, that kind of a thing to an organization. And it's maybe organizations spent $100,000 a year on UiPath's license fees, and now in the last 12 months later that are $108,000. So that's a really amazing sign. You will just based on that, you think at some rate you'll keep growing just within your own customer base. And as they're showing, a lot of their customers they're serving are really large customers. So they went from, these are customers with over $100,000, in annual sort of license fees they'd be paying. They had $2,100 to $2,400, and those that are over $1 million went from $293 to $320. So then you'd have the whole spectrum, sure, maybe multi-million-dollar customers, and ones all between $100,000, and $1 million, and probably numerous under $100,000 as well. And one more, data point, or one or two more to point out here before you look at sort of a really quick idea, a way to sort of think about the model for this, is their gross profit is something around 80%. So you're selling software, and the software, once you've built it, it's sort of one of those things it's a lot easier to just keep selling, how much cost do you really have to continue selling more and more software once you've created the software. So super high margin business or gross margin business that way. Their sales and marketing though, super high. If your revenue is 300 and some million and your sales and marketing is 166, 194 million. And then other things like R&D's close to 100 million. G&A is, 50, 60 million. So they're losing money right now, or they're like, their PE ratio is actually like tiny. It's their profits must be really relatively tiny, as they have a huge PE ratio, 387. But that's sort of a useless metric when you're thinking about say maybe they've spent a ton of money in the last year on R&D, building out this, Maestro product, right? And then, so will that amount of spending continue? Will this product grow? It's more useful to kind of, you think about where this is potentially headed than, say, a PE ratio is not super useful as a backward-looking metric in this case. But so I put together, a really basic model here. Just said, hey, if they have to do 2025 revenue of $1.71 billion, I'm going to lower this P. I was just messing around there. I'm saying, okay, what could they grow to, say, 5 years' time we're the end of 2025 now. What could they grow to by the end of 2030? And then discount that back at a certain discount rate to today. So discount I put in, and I'll throw this in my Patreon, this model, if people just want to play around with this or think about this, but discount rate of 12.5%. And they're a $7.5 billion company now. And yeah, like I said before, they're $14 a share right now. And so it all really depends on how fast are you going to grow and over the next, say, 5 years, and what your profit margin could be. And then I think based on those, if those are at the higher end of the spectrum or the higher end of this, profit margin spectrum, your PE ratio will be higher rewarded by the market. So, if you're like there's definitely some, if UiPath Maestro really, is not that good, it struggles to sell, they struggle to implement it at these, large enterprise organizations, and they only get, they're worth like a PE of 15 in the future. I don't actually think this is going to be what's happening. I'm more bullish on this than, definitely more on the bullish side of things. But in that case, you say you're at a 15 PE ratio and they grow 10% a year, just slightly more than their retention rate is growing. So only just slightly above that as their existing customers spend more and they're selling a little bit more, and then just eke out some profit. Say they get to like a 15% profit margin. Well, you could say, yeah, it's really only worth, $5-6 a share at a 12.5% discount rate. And you're paying $14, you're getting, you're really overpaying for this. But if they can grow, if Maestro's, really strong product, and it says, yeah, that this that graph we were looking at, it's like, zoom up here. If it's like UiPath is actually the most complete vision and it's executing, and you can set it up, implement it, sell it to these large companies that are buying this product, and you start growing, and instead of just an RPA, now they're willing to spend, not 100,000, they're willing to spend 200,000 because they can automate so much more and basically eliminate so many more jobs and make their processes so much more seamless. Well, you could say, yeah, maybe they're going to easily grow. Their existing customers are going to keep upselling, cross-selling to, and they're continue to add customers, and they're going to grow 20, 25, 30%, somewhere up in this range, right? And if you're growing in that range and the product really is as compelling as they say, they don't have to cut prices on it. It's not a price thing. People just want the product because it works and it's the best. Well, then your profit margins could be, I could see they're 20, 30%, even higher. Like these, I didn't even put 40% here, but you could go probably higher than this when you have a gross margin of, 80% for the product. While if you continue selling that product, you say you double, like say you grow 30% a year over the next number of years, that would work out to, you go from 1.5 billion to, 5.8 billion. So you could have, if you demonstrate some serious operating leverage, well, yeah, you're going to have some, I haven't really worked out the math. That could be a future video if I get more interested in this company, but you can have some profit margins that are really high. When you're selling, at an 80% gross margin right now. So maybe if you get to like 20 to 30% and your profit margins are 20 to 30%, like say that sort of bullish quadrant, I think the market's going to easily give them like a 30x multiple, and maybe arguably even higher than that if you're growing 25% a year, and you're a five, say they get to like that range, $5 billion. Let me just pull that math up for you here. So you're around $4 to $5 billion of revenue, and this whole RPA, agents market, what I read was that people are projecting it's going to grow something like 20 to 40% as a whole market a year. So you're playing in that. If you're one of the leaders in that, it's not crazy to think you could grow 20 to 30%. And then if you demonstrate operating leverage, your profit margins could probably be hitting 20 to 30%. And then a P of 30 sounds pretty cheap even at 5 years from now in a market. It still would have massive room to grow, far beyond $5 billion of revenue. Maybe they could do, I don't know, 50 billion of revenue one day, So the market, I think, could easily award them something like a 30x multiple. And then you're saying, your present value at a 12.5% discount rate is something between $24 to $54, right? Here's your sort of matrices of outcomes, right? So and obviously that's pretty compelling, but it all really boils down to some key questions here. I'm just going to pull up these, what I'm calling my kind of key questions. This is really all that matters, I think, about a company like Path. And here, I'll pull these up for you guys to see. So it's really, I think it all comes down to how good is Maestro? Is it as good as they say? Is it as good as it sort of seems in their demos? What's user experiences actually like? Is it significantly better than competitors that are out there? And when you're looking at something like this and you're thinking through a large company that would be implementing this, they would have I think there's going to be other products in the marketplace that are probably do certain steps or things better, but in terms of something that's reliable, how sort of reliable it is on this sort of complete it is, because that's what a large company is going to want. You could maybe have a certain, agent that does this process emails attachments better than UiPaths or whatever. But if you don't have sort of the overall arching system and that whole framework and system, that allows you to measure each sort of step, if that's not, there might be smaller competitors, but I don't know if they don't have that sort of overarching thing, then I wouldn't be really worried about those, from a Path thesis perspective. But are there other large competitors that really are, better than them? That's a key question for me. Also, how hard is it to sell to organizations? A lot of these questions tie together too, is it really, I have heard it's really difficult to set up. I've seen people complaining about the setup. It's, being frustrated, errors, but it takes some expertise, and it probably takes, hand holding and help from UiPath as part of your, setup. But if somebody's going to pay you $100,000 a year, well, you can have an engineer go and literally help them map out their whole system and think through it carefully. And some organizations just are not going to have the thought process. They're going to be tough customers essentially because they can't think through their processes clearly enough themselves. But as much as, how hard, how easy, how user-friendly can you make it? How learnable is it? Will really affect, how easy it is to sell to organizations and to how aggressively they can kind of grow the Maestro, product. And then another idea too is, are there other competitors will be, that are maybe not even there now, but are growing and that could make an equivalent to this whole system, but do it in a more nimble way, more user-friendly way, easier to set up way. Will super intelligent AGI come and be able to do sort of like like a super brain that can just build, can research, understand everything about a company, and then build this whole process and and do every step for you, including all the RPA steps, and do them like perfectly 99.99999% of the time. Like, is that coming in the next 3 years? Because that could completely destroy, a company like Path, where then any company, whether it's large, tiny, small business, or massive organization, and everything in between, could suddenly, that whole long tail of the market could fit inside of that. And that would be like the ultimate bear case for Path. Is that going to come or not? It's not totally clear. But that's a key question. And then another question too is, and again, this ties back to sort of how good is the product and how easily can they sell and set it up for people, is how aggressively can they grow and take market share. So if they can really aggressively grow, even if they're like spending more on sales up front to do that, I think that would be the right strategic move for a company like them, because you could get your foot in the door. You're continuing to learn and improve all your processes, all the different components that could plug and play and then be adapted to other companies in similar industries. And and then it's harder once you are in the door and you are working for those companies, those customers. Again, I don't think they're going to want to change if it is working for them. Only reason, again, they would change maybe is if like the super AGI came and it can do everything perfectly, and instead of charging, instead of paying $300,000 a year for your license fees to Path, you can pay, $20,000 a year to the super AGI company, and then it can solve all your problems. Like, that would be, again, like, that would, if that comes, that will radically change so many things. It's not clear to me if that, when that will come or if that will come, but that is, yeah, I think these are the absolute key questions, because this will drive, going back to this little model, like, this will drive whether they can do 20 to 30% growth, or you're like, oh, shoot, you're 5 to 15% growth. And your profit margin's like, 10, 15%, right? And you're stuck in this quadrant over here. And you're like, yeah, at the best end, we're like more, we're kind of fair value to get a 12.5% discount. I mean, the company, back to valuation too, the company is like, it's quite undervalued. You think about it, that it's even in that scenario, like, even if they only grow 15% and their profit margin they get to is 15%, which seems, it seems like there's a pretty good probability they could hit somewhere over here in the higher end But even if they do that, you're still arguably, making like a, 12%, discount rate on that. That's on a PE of 30. Maybe they don't demand that yet, so that goes down to 20. Well, now you're, now, if the market doesn't look as favorably, the investment wasn't so great. So that's kind of how I'm thinking about this company. Love to hear what you think down below. I will be researching a bit further. If it catches more and more of my attention, I'll be making some more content on it. But yeah, thank you so much for watching, and remember, it's in the bag.